All right, so this is a quick and easy silver bullet trade. So remember, for silver bullet, we're going to be looking between 9 and 10 o'clock, and that is Central Time. So right here, 1700 to 1800 is our window. Now we want to see a fair value gap form within that window. You can see we had one form right here, and we had one form right here. Again, this is on the 5-minute, and we had one form here. We also had one here. I'll go ahead and mark it just so everyone can see it. We also had a small fair value gap here. So these are all the fair value gaps that formed during that hour. Now you can see this one here was traded to multiple times. This one here was traded to once. This one was not traded to, and this one here was traded to. This is the one that we got short on. So how were we looking at that trade? Well, we were looking at it really at first on the 1-minute. So right here, you can see we measured that whole swing. So when it traded up and swung down, that was our measurement there. And when it pulled back up to the 50, it was 50% of that swing, also within that 5-minute fair value gap. So that was a short. We actually ended up getting short a bit before that. So that was really just like an added confluence or like an added bonus there. But it ended up being a really great trade. Now, say that you just normal setup with your stop there, your entry here, you could have got an easy 3-1, and then it really ran. You could have got about 5-1 out of that. So that was the silver bullet there on US 30. Now, NASDAQ, we look at the same thing. Now, we'd already talked about this morning. We talked about how it had run up above that PM session and had started running into traffic. And we talked about in the event of it going bearish, we wanted to see first this low of the day taken, and then we wanted to target this low of that PM session. So very similar. Right here we have 9 o'clock. So between 9 o'clock and 10 o'clock Central Time, we are going to look for a 5-minute fair value gap. So you can see here, we formed a 5-minute fair value gap between this low here and this high here. Now, so why did I only mark this area? Well, I did the same thing that I did on US 30. I saw this move here, and so I measured it. Let me go back out to the 5. So I measured that move, that swing from this high down to this low. Now, look, I only drew the part of the silver bullet because this was the fair value gap, but why did I draw it like that? I only drew it up to 50%, right? Because that's fair value right there in that silver bullet. Trades back up into it. We could have started populating shorts there. Right there, this 1800 closes, so we're no longer looking for any types of fair value gaps. Our entry, we'd want to get 50% would be conservative, but the higher the better. So if we could get there, we'll obviously have better risk reward. But for right now, let's just say that we entered at the worst possible entry, and we had our stop up here. We still could have got, looks like, about a 2.5 to 1 out of that setup. Now, I know that looks like a big mess right now. Let me clear it out and just one more time show you. So right here, we had right there that first level form, 9 o'clock. We ended up giving this fair value gap here, right there after 9. Mark 9. There's 9 o'clock. We formed the fair value gap. Again, we don't want the entire fair value gap. We want fair value of the fair value gap, which is right there. And we can take that setup down to our 1-minute charts and refine our entry. So right there, stop goes at the high, entry, best case scenario entry would be here at the very top as soon as that fair value gap fills. And then you see you could have got a 4-1 out of that one, delivered to 2-1 almost instantly, pulled back 1-1, and then delivered lower. Really easy silver bullet setup right there. Does anyone have any questions on the silver bullet setup before I move to EU and GU? Cool. So right here we have EU and GU. We've been covering odd man out. So you can see it's already drawn up there. London high plus high of the day. We see Euro runs above that. We usually look for 5-point grades, but they run up there by 3 points. So they run that high by 3 points. Now, meanwhile, GU, look at the same line, high of the day, London, cannot get there multiple times, keeps trying, keeps failing. So Euro, we talked about. One of these gaps in here is on the 15, I believe. No, it had to be on the 5. We talked about this last gap here and how we could have used that, but it wasn't necessarily anything special. It was just a higher level. It's like an inverted gap. And you just got your classic breaker, takes the high of the day, break structure down to the low, goes short at this breaker, and it would have held. So just classic odd man out. Like I said, we could have taken advantage of that, but I just was comfortable with taking US 30. Awesome. Well, does anyone have any other questions or anything that you'd like to cover before I hop off for tonight? Great. Well, all right. Appreciate you guys being on the call, and I'll
Do
send.
you see US 30 retesting the high? Because there's like a long week from this morning.
Yeah, most definitely. Well, all right, y'all. Y'all have a great night, and I'll talk to you soon. Peace.